Welcome to Climate Returns. Climate Returns is an interview series highlighting the voices of senior investors at well-known institutions as they explore investments in climate and climate-themed companies. I am Abe Yokell, co-founder of Congruent Ventures. And for context, I am now into my 18th year of investing in sustainability. At Congruent, we invest in pre-seed, seed, and early Series A climate and sustainability companies and are typically amongst the first institutional investors supporting entrepreneurs. On a somber note, I'm hosting this conversation today from an Airbnb in Chicago after the wildfire smoke chased my family out of the Bay Area. This is a very 2020 story. We chose to risk increased coronavirus exposure over breathing toxic smoke. Probably not a trade everybody should or can make, and we are lucky. We didn't have to evacuate, and we still have our home. The seasonal trauma from these increasingly horrific wildfires will continue to accrue and may trigger the first U.S. climate migration. While I have devoted my career to addressing what has been the academic certainty of changing climate, the reality of changing climate is settling in, and the urgency continues to increase. On a more uplifting note, I am delighted to welcome Nick Grossman to our series, Partner at Union Square Ventures. This conversation follows our first episode with Aaron Jacobson of NEA, and our second episode with Sarah Tavel, one of the 4 GPs at Benchmark. We have pulled 3 voices from the generalist venture community representing a cross-section of thinking and investment style. Aaron represents the incorporation of climate-themed investing into a top-tier generalist fund focused on robotics, deep tech, and B2B. Sarah represents an amazing consumer investor who is incorporating sustainability into her investing lexicon. And we'll discuss Nick and Union Square's more specific thesis in energy and climate during today's interview. By the end of the session, we'll have covered B2B and SaaS, a consumer investor, and Nick will tell you more about this, but a fintech and blockchain investor's view on climate, as well as other areas. Climate is everywhere. I'll let Nick introduce himself shortly. As a quick advertisement for Union Square Ventures, they are one of the few venture firms that have successfully carved out theses in trends that at the time seemed fringe and later became mainstream. They were amongst the first to invest in Stripe, Twitter, Twilio, Zynga, Tumblr, and Coinbase, amongst others, and have published their sector theses openly. To that end, USV published their latest update in January, focused on energy and climate, and we, of course, have already invested together in one company, Leap Energy, which I am sure we will discuss later. So Nick, if you could introduce yourself a bit, personally as well as kind of USV's venture style, that would be phenomenal.
Sure. Thank you, Abe, and it's great to be here. Thanks for having me. Maybe I'll start with myself. So I've been at USV for about 7 years now, and during my time at USV have focused a lot on our crypto and blockchain portfolio, and then across our whole portfolio, a lot of issues around trust and safety, sort of policy, legal, data. I've always been drawn towards the challenges that come up when you have different kinds of infrastructure at play. And at USV, we've invested in social networks and marketplaces and internet platforms in a bunch of different categories. And so I've worked with our whole portfolio on a variety of issues. Prior to joining USV, I was an entrepreneur focused on the urban tech space. So led an incubator in New York City called Open Plans, and we did a lot of work around transportation infrastructure, and with a focus on open source and open data. And actually, the mission focus of a lot of that work was around walkability, transit-friendly cities, sort of sustainable city infrastructure. So a lot of my personal background is kind of at this intersection of startups and technology, and also cities and the impact of tech on the world, broadly speaking. So climate has always been sort of in my general aura, but it has never been a direct focus until recently. So at USV, we've been investing since 2004. We're on our 9th fund right now. And we, as you mentioned, have been a thesis-driven firm, by keeping a relatively small fund size ranging between $100 to $200 million each, where we've taken an approach of sort of not boiling the ocean, investing in everything, but trying to carve out discrete theses of things that we think are going to happen given sort of a point in time. And those have evolved over time. The very early USV, the first USV fund was really focused on network effects broadly, and consumer network effects. So, the Series A in Twitter was our first really big win, but also out of that same fund were investments in Etsy and Zynga. And the idea that, given the evolution of internet infrastructure, broadband, and, sort of compute, you'd start to build new types of people-to-people networks on the internet. And that was at a time in 2003 when Brad and Fred were raising the first fund that the market was very sour on the internet and applications on the internet because it was in the wake of the dot-com bust. But it turned out that that was actually a good time to be investing in new applications because so much of the infrastructure that would enable internet investing had been developed during the lead up in the dot-com bubble. And that actually turned out to be a great opportunity and a great moment. And in the 15 years since then, we've sort of evolved the USV thesis. The sort of second version of the thesis was focused around the infrastructure that would enable broader deployment of internet applications. And so that was things like MongoDB and Twilio and Cloudflare, sort of enabling infrastructure for a broader deployment of applications. And since then, we've focused on, the further deployment of internet technologies into different parts of the economy with a lot of focus on education and healthcare and fintech companies like Duolingo and Nurex, Lending Club, and a bunch of others. And mixed into all that has been crypto, which is we can talk about, but it feels to us as a profound technology shift in the nature of the internet. So that's been the sort of USV thesis all along, and we try to define each sort of vintage of the thesis around the opportunity at the moment, given where the market is and where the technology that's been built is. And we'll talk about how climate fits into that, but our feeling is that now is a good time and an important time to be focused on energy and climate. And it's our feeling that a lot of the groundwork that led to previous success in the earlier versions of the USV thesis are present today. Those conditions are present today and make it a good time for us to be focusing on climate, which we're doing.
Phenomenal. Thank you for that preamble. A city planner turned to venture. I like it.
Yeah, something like that.
Something like that. So how often, talking about USV's thesis development, how often do you refresh those theses on average? And I'm just thinking about kind of that iteration cycle and how long the climate and energy discussion has been brewing within USV.
Yeah, so if you look at USV.com, the front page of our website lists out the three vintages of theses that we've had so far. We call them 1.0, 2.0, 3.0. And it turns out in hindsight that, every 3 or 4 years, there's a revision that happens to correspond with something. So I think thesis 1, which was about large networks of engaged users, was riding on top of the internet existing, and open source web servers existing and broadband existing. Thesis 2 was more about the other, it was about mobile partly, and infrastructure, new things that would get built on top of mobile, and other sorts of infrastructure that would be necessary to enable a next generation of applications at that point in time. And then thesis 3 was about the furthering of the internet into more areas of the economy. A lot of our thinking has been driven by this economist Carlota Perez, who's studied these socio-technical revolutions where a new technology booms and busts and then broadly diffuses into the economy. And that her work was really an inspiration for the initial USV thesis, and we come back to it often. And in some ways there's echoes of that now with climate, where there has been somewhat of a boom and bust in green tech, a lot of investment in things like batteries and solar, but then a big drop in the market. And it feels like today, like the shape of that market is in sort of energy and renewables today is similar to what it looked like in tech, 10 or 15 years ago. So that's a long answer, but the short answer is, every few years, sort of in response to where the infrastructure and kind of the world seems to be a big part of all of this that I didn't mention is, about consumer behavior and business behavior. I think we don't, as much as we consider ourselves technology investors, I think really what we've succeeded at investing in is new behaviors by people that will be enabled by technology. So today, so much of like online learning is just happening, right? Because of COVID and other reasons. And we started investing in that 6 or 7 or 8 years ago. Climate and all of the changes that are happening right now are profound in terms of how much of a behavior change and a change in the structure of the economy that's going to produce. And so we want to be there to capture that in terms of providing solutions and creating opportunities.
So it's often said, I'm going to get this slightly wrong, but it's often said that there's not much difference between being early and wrong in venture investing. So when you think about, what you're really articulating is building venture backable companies on top of infrastructure of some kind that has been, the groundwork has been laid. And you've done this consistently now over, a number of different cycles. Fund 9, that's a lot of funds in venture. That's a real venture firm. So you've clearly, and USV has clearly gotten this right over many cycles. What leads USV and you to believe that the base layer of infrastructure is built sufficiently to produce real venture grade returns as you've carved out your thesis in climate and energy today? Obviously, we're dealing with the urgency of the impacts. So we clearly know that this is real, it's happening, and we need to address it. That's very different than actually being able to drive returns from early stage venture investing.
Yeah, I think the way that USV has approached it so far, at least, and this somewhat follows with the Carlota Perez, curve cycle, is that someone has to go in and invest in all of the heavy infrastructure to enable a new era. And that's like broadband networks, or it's batteries, or it's, the steam engine. But once that hard infrastructure is there, at least in the case of the internet, and I think now in the case of climate, it's possible to build software businesses on top. And software businesses are highly scalable, highly leveraged, can grow very fast, can have very strong network effects. And so if you look now at the cost of solar production, the cost of battery production, the deployment of those assets led by smartphones and companies like Tesla and lots of others, we don't want to be the investors that are pioneering all of that hard infrastructure. We want to be the investors that can build a layer on top of it that's software defined, by and large. And as we started looking into climate, those are the opportunities that we started looking for. And we want, there are many directions we can go in here, but where we started was the most sort of USV-ish approach to look for software defined networks that can be built on top of new look energy infrastructure. And it feels like that's becoming possible given what we're seeing in batteries and solar and wind and so on. Now, I should also point out that the energy sector is not the totality of climate investing surface area, right? We're talking right now over Zoom, and my son's in the next room doing his 6th grade Spanish class over Zoom, and basically the entire economy has shifted from real world to virtual. And so I think there are also a lot of opportunities that are just built on internet technology, have nothing to do with energy, that are going to be highly investable, that are very, very climate positive. So there are probably other reasons that I'm not remembering, but that general set of things is what has helped us believe that now's a good time.
Yeah. So you mentioned where you're starting there, that they look like network effect USV software driven companies. As you look at that investable surface area, as you coin it, do you see that there are sufficient opportunities to invest in with that thesis where you can, have a reasonable cadence? Or is it going to be, look, when they show up, we will do them, but there aren't going to be that many? So the real question is this kind of a proactive, are we putting a stake in the ground and investing come high water? Or is it, we will invest as the companies show up? And it's always hard as early stage investors to predict the world and where these companies will come from, but it's a curiosity.
Yeah, it's a good question. I think there's more complexity in this market than we're accustomed to. You know, we're talking about electrons and hardware in addition to, you know, bits and software. And as we've started exploring the space, a lot of the things that we've seen are more capital intensive, more operationally intensive, less pure software than I think we're used to. And so that's been something we've been wrestling with. You know, companies that operate on the energy markets have to put down collateral. You know, a lot of what we're talking about, just one, you know, one tiny example, a lot of what we're talking about is a turnover of physical infrastructure, like moving to, say, heat pumps. And, you know, there's a manufacturing component there, there's a project finance component. There are regulatory complexities everywhere in this market, you know, region by region. So, you know, we haven't yet seen the perfect pure software, you know, thing here. And I think we are getting more and more comfortable with the idea that that may not be everything in this market. And it's part of the reason why we're, you know, we started out really looking at this maybe 2 years ago. We made 2 investments in 2019 in the space at the end of 2019. We've been continuing to look at it, you know, with a lot more depth recently, but we've been taking our time to try and understand what's out there. And for sure, a lot of the projects that we've looked at and haven't invested in have more complexity, more capital costs, maybe less elegant go-to-markets, or maybe less scalable go-to-market motions than we'd like to see. And so for sure, that's a consideration and something we've been, you know, working on as we've figured it out.
Yeah, you mentioned climate covers a lot of ground, which I think has been a recurring theme within climate sustainability investing. Are there a couple specific areas where you've carved out kind of investable theses within the broad category of climate? You can talk about some of the companies you've already invested in if you'd like, or just if there's kind of open loop on that. I think the audience would be very curious to hear.
Yeah, and this is all initial thinking,
Sure.
but we've done some of it, so I'm happy to share. So I think broadly, at a really, really macro level, we're looking at things that mitigate carbon impact. That's, you know, producing less or sucking more into the ground, or approaches that can help us adapt to climate change. Because I think a lot of things are gonna, in the way we live, whether it's migrations or you know, ways of living and working, that are gonna have to happen. That's at a super duper high level. And as I mentioned, we're also on the lookout for these software defined networks that are sort of, you know, in the traditional USV strike zone. The couple of areas where we spent a fair bit of time recently are looking at networking up energy devices, distributed energy resources, and thinking about how they can work together in concert. You know, if there can be connectivity built between the vast number of devices that are getting deployed, you know, car chargers and batteries and, you know, different types of resources, both in front of and behind the meter. And on that thesis, which was kind of one of our initial theses, we invested in Leap, where you and I are on the board together, which is a interface to the energy markets for you know, aggregators of energy resources. It is largely a software-defined system. It reminds us of Stripe and Twilio and other companies that have successfully taken a really complex, messy underlying system and built a simple, elegant, safe adapter, you know, that businesses and consumers can use on top of it. So that's the first investment that we did that was born out of that sort of sub thesis. The second one that we've been looking at is around offsets and then related infrastructure that's necessary for offsets. So we made a very small seed investment in a company called Project Wren, which is a consumer-facing carbon offset platform with a marketplace on the back for carbon sequestration. We've also been looking at, you know, if you believe that offsets are important, then you would believe that monitoring to make sure that, you know, the mitigations from the offsets are real. And so I think
Yep.
broadly speaking, monitoring and tracking is important, and that's a category we've been looking at. We've also spent a bunch of time recently looking at the problem of heating inefficiency, both commercial and residential, and how big of a portion of carbon footprint that takes up. And so we've been looking at heat pump technology and ways to get that broadly deployed. We haven't made any investments in that space yet, but that's one of the sub areas that we have spent a bit of time on. There's more than that, but I think those are the ones I think where we've been the most concrete in our thinking so far.
Yeah, this isn't something we discussed previously, but when you think of those kinds of investments, it seems to me that most of the investments you've made in the past have a pretty clear kind of channel and go to market. And that may be incorrect, but just kind of looking across some of your companies, particularly the internet related, where you're going direct to consumer or direct to market, how has USV digested some of the complex value chains like heat pumps and HVAC heating, ventilation, air conditioning,
Yep.
for those who don't know the lingo, is a absurdly complex, multi-tier distribution story.
Yeah.
How do you think about that? And of course, Nest, originally when they came out, blew that whole thing away by going DTC, direct to consumer, but that was many years ago now. Does that get digested within the investment theses that you make, or is it it's a solution that's going to get out there because it's a better solution?
Yeah, so heat pumps is a tough one of the three that I mentioned because it's the sort of heaviest lift, and it may be that companies that are successful there are sort of full stack, and it also may be that you can build a very, very large business doing that kind of thing that is not a global winner take all software platform that may end up being like a regional, very, very successful regional business that could be valued in the billions, that doesn't look like a regular software business. So setting that one aside, I think what we always look for and go to market at USV is some sort of a bottom up adoption model. And that's been true for us in consumer networks like Twitter and Etsy, but also in developer tools like Twilio and Stripe. And also, as we've been investing in learning and health, we're really big fans of bottom-up adoption model that then may lead to large enterprise businesses, but doesn't typically start there. So for us, that's kind of our default stance, and we're hoping that we can find things in energy and climate that look like that. And I think that is largely true for both Leap and Ren. Leap has a B2B go to market, but it it's very broad, and Ren is direct to consumer with a marketplace component. So those both appeal to us a lot. But we're opening our eyes to go to market motions or even business model architectures that may be a little bit outside of what we're accustomed to, both because of the importance from a societal point of view, but also because, I think there are big businesses to be built there that don't look like the kind that we've traditionally backed. Yeah,
interesting. Just as a brief digression for the audience, the Q&A panel is open in about 15 minutes. We will take some questions from the audience. In the past, we haven't been able to get through most of them, but feel free to start throwing them in there so we can sort through. You just touched on something, Nick, that's I would say a debate and very stylistic according to the firm's culture. There's often companies and firms will only invest in what they perceive to be winner take all markets, which you just referenced. There are many, the global industries that climate touches broadly are so diverse. None of them are winner take all. Well, that's probably an overstatement, but many are not winner take all investments. Do you historically have a view on winner take all versus kind of the regional, even if the region is the US, wins from a venture perspective? I think Andreessen famously only looks at winner take all markets historically, and maybe that's shifted. I haven't spoken to anybody there in the last year on it.
We look for and have always looked for platforms that have defensibility and network effects.
Yep.
And sometimes that naturally leads to something that's winner take all. Like if you're in social networking or I don't know where else, but like it doesn't, I don't think it has to be winner take all. And I guess it depends on what your definition of all is. You know, we've made some, if you look at our investment in Duolingo, you know, there are a lot of different learning companies, and there's not going to be one winner take all learning company.
Yeah.
But this is now a, you know, $1 billion+ mobile first learning platform that is an incredible business, incredible investment. And maybe it will and could be the winner of language learning. Maybe it can be more than that, but we're not looking to be the, you know, the global, you know, internet learning platform for all things. So, you know, I think it varies, but we definitely look for defensibility and network effects. And I think sometimes that leads to a winner take most type of model. And
Yeah.
I think there will be some of those here in climate for sure. You know, depending on where it sits in the stack, and depending on which, you know, what industry it's in, whether you're talking about something that's in remote work or, you know, an API for the electric grid. And so I think I guess we're not dogmatic about that, but we've always been very, very aware of looking for network effects. And another piece of it is, you know, every firm has a different capital structure. We're a small fund, relatively speaking, and, you know, we don't need every company to be a decacorn for our funds to be very, very successful. And I think that's, you know, been to our advantage over time as well.
Yeah, I think that's fair. There's a digression into, you know, venture style and fund construction there. But while you mentioned the word decacorn, when do you think we will see our first climate decacorn outside of Tesla?
Yeah. Well, it depends on what your definition of climate is,
Fair.
right? You know, Zoom maybe, I don't know what their stock is trading at today. But it may be that, you know, that you see a lot of them on more on the behavioral side outside of, you know, pure energy and pure climate. Yeah. But I don't know, not too far away. I mean, I think we're in the lead up to a bunch of big things getting built, and, you know, I would be surprised if there weren't many multi-billion-dollar companies in this space in the next, you know, 5 years.
Yeah. Yeah. Interesting. So you touched on some of the challenges as you've evaluated climate and made some energy investments. Are there a couple specific either learnings or challenges you see coming from kind of the traditional venture background as you have really dug into, you know, many of these climate and energy themed investments? Any specifics that you can pull out?
Yeah. I mean, so on the side of the house, that's the, you know, real energy side. And anything also that's involving a lot of science, let's say, but let's just focus on energy for a second. You know, you and I have been working together on LEAP as an example for about a little less than a year now. And it's been an incredible learning journey for me just to understand the shape of the energy markets in terms of, you know, there's an electricity aspect, there's a financial aspect, there's a regulatory aspect. Yeah. It's just very complex. And so I suspect that will be true in a lot of places in this. And, you know, over the years, we've invested time as a firm in figuring out the complexities of different sectors. I mean, I spend a lot of my time in the crypto and blockchain world, which talk about, you know, idea mazes and learning journeys. You know, it's been almost, I don't know, it's been like maybe 9 years of that, and we're still sort of scratching the surface. I suspect it'll be similar here. So just at the beginning, it has been a lot of work to understand the energy world. And we've been assisted by a lot of entrepreneurs that we've met with who have really helped us on our way, those that we've backed and those that we haven't. And I suspect there'll be a lot more of that as we get into the space, but I think we're open to it. And you know, it helps to partner with specialist investors like yourself, and also in, you know, we've done the same thing in crypto. Whereas one way that we've been able to succeed in investing in that space without being deep experts ourselves is to cultivate relationships with specialist firms. And I think we'll do the same thing here in energy and climate, because I think we'll always be somewhat of a generalist investor looking at these spaces. And our goal in general is to try and be experts at the thing that we're good at, which is, platforms with network effects and, different ways to build internet businesses. And we'll, partner with folks who can help us on the deep energy and climate stuff.
Terrific. So you're saying we should work together more?
I guess.
I'll take it. All right. I was speaking of kind of the venture community, generalist, specialist. A lot of people have a tough time kind of parsing the veil of the gossip in venture. So I like to be open about some of these discussions. When we sit down after a board meeting, when we're talking about activity in the space, what is your sense of the venture community's ongoing interest in climate, energy, and kind of the broad category of investing in sustainability? Increasing, decreasing, and what level of interest do you see across those discussions?
Yeah. Since we've been paying attention to it as an investable category, it seems like it's been increasing, and it may just be that, you notice more of what you're paying attention to. So take that with a grain of salt. I mean, it definitely feels like a lot of individual investors at, sort of generalist, regular venture funds are sounding the alarm about climate. And some of them are, breaking off to do their own thing, or, reshape their investing, like Chris Sacca with lower carbon capital. I think others are starting to do individual angel investing. Within USV, it was a combination of a number of individual partners who kind of caught the bug, got really fired up, started making investments on their own to understand the space, and then kind of recruited the rest of the firm to believe that it was important. My partner Albert Avenger was really central to that at USV. So I don't know. I also see a lot of younger investors, and also younger engineers and other sort of folks more on the staff side of the house at tech companies, coming to us and saying, I only want to focus on climate. I want to work on climate focused stuff. And it feels like there's a sort of a Gen Z groundswell around that as well, maybe outside of the traditional VC scene. So I don't know that I have a really great answer to that question. It feels like a lot of like this issue in general, there's always been a very loud, relatively small community of folks. And I think the way you put it was sort of an academic, lens on it. And then the question is, what's going to turn that into something louder and something more mainstream? It certainly feels like the fires in California and the storms in the South and COVID and, accelerating behavior change broadly, I think they're all tailwinds to this.
I don't actually subscribe to this fully, but many people look back and say, there's kind of the Netscape moment, that triggered the boom of the of tech investing in the late 90s. Do you think that there will be a moment like that in climate? Do you think that's already happened and we're going to look back in 10 years and, watch what has happened to our emerging world and returns and say it was this? Or do you think that's in front of us still?
It's a good question. There was a lot of internet before there was Netscape. Maybe 10 years worth of buildup. So it's hard to know what class or what counts as that big of a crossover moment. It feels like Tesla is a really big deal in terms of proving something to the market and building a brand. I don't know if Tesla is to energy as Netscape was to the internet. I don't know. I also think it's still really hard for most people to feel like they're doing something climate positive. Just from a personal behavior change point of view, it's just not easy. you
Yeah.
know, to get an electric car, you have to spend 35 grand for a Chevy Bolt, or 70 to 150 for a Tesla, and nobody can do that. And so I think we're a ways away from climate actions on a personal level that are with like accessible and understandable to most people. I also, on the flip side, it feels like corporates are way ahead in terms of trying to do things, and you see companies like Stripe and Google and others like wanting to really to go carbon negative, and so it may be that is a stronger driver. But maybe we haven't gotten there yet from a pure consumer point of view, right? Like what's going to stop? And I think maybe it's COVID plus Tesla. I mean, COVID has stopped us from flying on planes by and large. And so to the extent that, that's an impact, which obviously it is, that's a massive behavior change that wouldn't have been possible without COVID. So who knows?
Yeah. Yeah. You're welcome to dodge this question broadly. And we touched on it a little bit before, but as your thesis evolves, as all theses do you think you'll end up dedicating specific partners to investing in the space? Will it be, part of the main fund? Will you carve out part of the main fund? Would you, in the future, do you think funds that maybe outside of USV will start bringing on sidecar funds just to focus on climate?
Yeah, so it's a good question. The way that we've started, as I mentioned, is just sort of dipping our toe and looking for opportunities that fit our existing investment thesis roughly, right?
Yep.
And can be sort of a natural expansion of that. It may be that over time, it makes sense to have dedicated vehicles that may have, there may be a reason in terms of investing style or in terms of limited partners who are interested in the category, or maybe returns, but it may be that there are characteristics of doing a climate dedicated fund that are sufficiently different from a traditional venture fund. We've certainly seen this in crypto, where not only is there deep specialization required to understand the market, but there are also a lot of new moves that the dedicated crypto funds do. And so maybe there's something like that to be seen in climate. And then I kind of think like long term, it'll be like the internet. 20 years ago, you might have asked, are you going to have a dedicated, internet fund? And, now that seems kind of silly. And I suspect that climate will be kind of the same way. I mean, I think in 5 years, or certainly in 15 or 20 years, everyone will be investing in the wholesale restructuring of the economy around climate, the same way that for the past 20 years, everyone's been investing in the wholesale restructuring of the economy around the internet.
That's a big statement. So you think in 10 to 20 years, the same way that everybody's been investing in kind of sea change with internet and connectivity, that climate is the next internet? My words, not yours.
and the internet is not the technology. It's not like the steak; it's the frying pan, right? And I kind of think that it's the same way with climate. The climate is the thing that hosts all life on this planet, and it's changing fast. And the economy and all of our behaviors are going to have to change in response to that. So yeah, I think it will be that big.
Yeah. So those are big statements. USV and you have been right in the past. When you broke I'm sure we've all been wrong too, by the way. That's the venture game.
Lots of times.
But, yeah, sad but true. We're usually wrong more than we're right, right? A fun of early stage fund construction. But as you talk about investing in climate with your LPs, so you announced your interest in energy and climate early this year, I think publicly. I'm sure your LPs knew before then. What's the reaction been? Has it been positive? Has it been mixed? Has it been negative? Has people harkened back to, the days that I lived through in Clean Tech 1.0, where there was, some pretty bad outcomes at the fund level? What's the response been?
Yeah. And so every time we've introduced a new, element or prong to our thesis, we've previewed it with our LPs. We did that with crypto. We've done it with learning. We've done it with health. And we did it with climate at our annual meeting last year, and other times as well. And I think the way that we frame it is not as if it's just a sector, but like a technical sector, but
Yeah.
as a broad shift that's going to be changing a lot of things in the economy and in human behavior. And basically back where we began about why is this a moment that it's investable for us or relevant to us, and the infrastructure that's been laid out that we can now build on top of, the behavior changes that we're seeing in the market that feel like indicators of similar behavior changes we've seen in the past. And when you talk about the sort of just broad set of behavior changes that can happen in the economy beyond just things about fuels and energy, people are very open to it and have been very receptive. Every investor and LP has different mandates, different structures. I think we've begun by framing this as an extension of the same set of ideas that we've always been investing around, and another major shift that will trigger the kinds of changes that we've succeeded investing in the past. And so it has gone over quite well. And I think people understand how we're approaching it and why we're approaching it the way we are. There's definitely, I think, some amount of scar tissue from previous generations of clean tech investing, and there have been dedicated funds in the past that have flopped going after the space. I think probably the one concept that seems to resonate the most, that we really believe in, is that if you look at the RENX Renewable Energy Index, which is the index of public renewables, and you look at the sort of 2007, 2008 pop and drop,
Yeah.
and then the long fallow period, and then the beginning to climb. If you overlay that over the NASDAQ from 1999, 2000, and then into the early 2000s, they look the same. And that's really the argument that we're making, that yes, there was a tough time in this space, back 10 to 15 years ago, but that is laying the groundwork for the next turn of the wheel, which in the case of the internet has resulted in a major transformation of the economy and a lot of really, really massive businesses getting built. And that's where we see this market today.
Yeah. Yeah. Interesting. I'm going to turn to some audience questions here. I'm going to pluck one out from Eric that we have gotten a lot from people as we started Congruent, 3.5 years ago. But I'm always curious to get other people's views as well. As early stage investors, are there concerns around availability of later stage capital for climate tech investments? So when we do the seed, collectively, or the Series A, how about the Series B and the Series C?
Yeah, I mean, we'll see. We don't know yet. I think one of the things that we've observed is that a lot of these companies require some sort of project finance component. Yep. And in the sort of limited amount of conversations we've had with those types of capital partners, there seems to be a very strong interest in deploying into the space, given enough of a proven model. So I have at least initial good feeling about that side of it. And, we're hoping that businesses that we back at the seed and A stage, by the time they're ready for a B or a C, will have growth and revenue characteristics and scaling characteristics that look like some of the best companies we backed in the internet space. And, they'll be able to find growth capital from there. But we don't know yet, and we'll see. And I think one of the challenges here that we'll work through is, do companies in this space end up looking like tech companies, or do they end up looking like energy companies, and what kind of multiples do people put on them, once they're mature, and so on. And so that's the next factor as well.
Yeah, totally fair. This is a digression that you've just put me into on, multiples, but has USV been paying attention to any of the SPACs that have been going on? There is a ton of capital sloshing around in this area, and, some of the kind of overhyped names, in my opinion, have been in actually energy, which is interesting to watch.
Yeah, so an hour doesn't go by that I don't get an email about a SPAC over the past 3 weeks. We haven't really been looking at it super closely in energy and climate, just because it hasn't been relevant to our portfolio. So I can't really say anything about that. But
Yep.
it, at a high level, it seems like this will open up another pathway to the public markets. There have been a lot of changes and probably improvements to structures in SPACs that may make them more palatable and effective for entrepreneurs. So we're looking at it just like everybody else is. But
Yeah.
I really don't have a point of view on energy and climate specifically.
Yeah, fair enough. There's a question or two in here about project financing. As a quick digression, so Congruent has 33 companies. When we do this analysis, it's a full third of the companies that actually have some aspect of project finance.
Yeah.
As they scale. It's more of a statement than a question. But do you see relationships in the project finance community as an important part of building your network in climate?
Yeah, for sure.
Yeah.
And we've definitely seen that in a lot of the opportunities that we've looked at. So yes, and it reminds me a little bit of our investing in the fintech space, where there's often an equity component and a capital partner component. So and we have a number of investments there that have, as they've scaled, have had to scale their user base and their capital base kind of in parallel. So it's not totally foreign to us as a model, but it does seem like something that will be a thing here.
Yep. Got another question here. Companies like Microsoft, Stripe, Spotify are now investing in negative emissions technologies. I know you kind of mentioned, adaptation and mitigation, really, right? Is this an area of interest for USV, despite the fact that it's largely hard tech? And how do you analyze the demand for these types of technologies when there's not a specific market there?
I haven't spent a lot of time in that, but I believe that that's going to be important and will be to the extent that I've looked at or I've seen carbon sequestration, technologies and, algae and I forget what the other one's called. Anyway, we're aware of that as a important piece of this, and it's sort of in our market map. And I think more importantly, the fact that big companies like Stripe and others are really interested in it, I think is a great signal that there's at least some initial interest and demand there. I think it's at least for us at USV, TBD, where and how we might make investments, along those lines, to the extent that things are outside of the sort of software-defined network strike zone for us.
Yep.
But again, I think as we go deeper into this space, we're definitely open, to broadening how we look at things.
Yeah. Some more audience questions. Hopefully this is a layup for you. What lessons from crypto investing can be transferred to climate investing, if any?
Well, okay. I mean, the lessons, if anybody's been following the crypto markets for the past week, has been really interesting with SushiSwap, with its vampire mining takeover of Uniswap, where we are investors. And if anyone wants to talk about vampire mining, we can follow up on that. But I think one piece of it is that, crypto is turning everything into a market. And where you have markets, there are good things and bad things, but people start to play games, and markets can get, that's the whole point of markets, really, is for people to play them and invest in them and work through them. And so I think investing in crypto has been and maybe fintech more broadly has been a real eye-opener for what happens when you radically open up markets to more participants, to the extent that a lot of what is happening in energy and climate has to do with how energy is priced and traded and used. I think that's sort of been helpful for us in understanding it. Maybe I'll stop there. I could probably come up with other ones. That's a really interesting question.
Yeah, you just actually reminded me. I saw a pitch yesterday about tokenization of infrastructure.
Right.
To actually recycle capital into projects, which is a longer digression. I should send you that company.
Well, yeah, and I think you're going to see lots of that. Like so much of what you're seeing in crypto right now is, tokenization of, well, sort of derivatives on top of crypto assets.
What could go wrong?
No, exactly. But I think there's been a ton of work going into bringing real world assets, into crypto finance land and synthetics and so on. And, I know a lot of, maybe not a lot, but some folks who come at climate are also interested in crypto because they understand how much of the climate puzzle is about, credits and, sort of the economy of climate. And if you look at, carbon taxing, for instance, that so much of what's going on behind the scenes in climate and energy is financial. And, and I think some of the solutions in the space will be very much on that side of the house.
Yeah, fair. So a couple questions in here about kind of evaluating the impact and tracking impact. When you think about investing in energy climate companies, do you think through methodologies of impact or tracking, or is it this is clearly a climate company and we're investing because we need to make a return for our investors?
So I worked for I don't know, 10 or 12 years in the nonprofit sector previously. And one of the hardest things when you're focused on impact is quantifying it.
Yep.
And I think the entire sector struggles with it, and it's a problem. And it affects the funding pipelines. It in my mind, it causes a lot of problems. And what I've always liked about working in the private sector is that, we can quantify what we're looking for. And at the end of the day, it's, enterprise value, network value, revenue, sort of growth. And for us, and if you believe that and then if you look at climate and you believe that the platform that you're investing in should have a positive impact, we're investing in businesses that also will have a measurable, success factor of some kind. And so I don't think that will change too much. I think we would, for ourselves, be unlikely to invest in things that have somewhat of a squishy environmental impact that can't be measured or, can't be turned into a real value. I mean, at the end of the day, we are fiduciaries that are investing on behalf of our limited partners, who are, at the end of that day, police officers and teachers and other people, with their savings in our hands. And so we're backing businesses that need to have value as businesses, but we're very open to the shape that those can take.
Yeah, excellent. There's a couple questions in here about how operators, executives, entrepreneurs kind of bridge the gap between going from tech to climate. As you've gone through your journey, are there some specific resources that you point people towards as they're trying to both educate themselves and move to investing and spending careers in climate? Maybe you should call it My Climate Journey.
Yeah, the My Climate Journey, right. Well, so Jason Jacobs' podcast, excellent. That guy is on fire, and he's doing a lot of hard work for the rest of us, so we don't have to, in exploring and talking about it. This video series is excellent, and it'll become a resource.
Tell us more. Great, thank you.
So I don't know that I have like go-to resources to share. I will say, as we got into this and started doing research, we published a little bit of our research, which we're happy to share. So if you go to usv.com/climate, that will redirect you to a blog post that we wrote introducing our first two investments that also links to 80-page research deck that we did last year, looking at a handful of aspects of the space and trying to understand them better. So that's been where we've been aggregating our own learning. That deck is probably 9 months old now, but it's still pretty, I think, quite good. So usv.com/climate is a good place to follow our thinking, at least.
Yeah, excellent. Just pulling out some more questions there. Do you think about diversification when it comes to the kind of the subset of climate investments? Like, I mean, I guess you've invested early stage offsets company. Would you make more investments in that ecosystem, or would you prefer to invest outside of it? Similarly for, Leap, our mutual company doing wholesale market access.
Yeah, generally speaking, we try not to invest in competing companies. We will make 20 investments, 20, 25 investments out of a fund. And so, it's a small number, and we make concentrated long-term investments. We're on boards working with companies. And so we make a real effort not to invest in things that are competing at the time of our investment. Now things drift, and so on. Sometimes when we are entering a new category, like a very new category, and making a number of, say, seed investments, we will, be okay with investing things that are closer to each other and be upfront with entrepreneurs that, we're doing that's our intention. And there may be aspects of climate that kind of fit that mold. The important thing for us is just being clear about our sort of intentions. But if you look at our history in fintech and in crypto, in learning and in health, within each of those, there are sort of one or maybe two companies per sort of sub theme or subcategory, and we try to keep it that way. Yeah,
it makes sense. You're our first East Coast. I know you're not always in New York, so I won't say New York, but you're your first East Coast-based investor we're speaking to. We have a question in here about any particular areas that are busy, developed, or uniquely interesting that you see in kind of the New York and Boston areas as it relates to climate. I know you invest across the U.S.
It's a great question. No, it's a really great question. And I think there is a regional component to this market, maybe that's different than some others, or this category. So we're based in New York City. That's where I grew up. I live outside of Boston now. Most of us are in the East Coast most of the time. So, I think it may be that we look for or find things that are sort of regional near us, but I don't think that'll be our goal. Just to take the heat pump example, as far as I understand, there is a sort of outsized opportunity for that technology to work in the Northeast generally, just because of the way that things are here. And so, I could see us potentially investing in a company in that space that's regionally focused. I think by and large, though, we are looking for opportunities that are, at least national scale. But not completely wedded to that, but I think we're, and I think a little bit goes back to like, what are the margins? How big a business can you make and have it be regional versus, types of businesses that really need to be national or international to have scale and be effective. So I think it's likely that it will be some combination of both here.
Yeah. I have one final question before we let you run away for the rest of the day. But do you have anything else that you think is worth sharing with the audience before I go there? Anything we've missed?
I don't think so. We covered a lot of ground.
Yeah. Great. That's the idea. So name a couple meanings to that. For the asset allocators and the LPs on the line, I always like to ask this question to be consistent. Do you think that this sector broadly will produce true venture grade returns for the likes of USV and others as you invest over the next 10 years?
Definitely yes.
No question.
No question.
That's what I like to hear. All right, great. Nick, thank you for joining for our third episode of Climate Returns. Having USV put a stake in climate tech is gratifying for somebody like me who's spent their career working in the sector. We need more of Nick, and we need more Sarahs and Aarons in the fight as well. And I hope everybody joins for future conversations. Stay safe. Nick, thank you very much for joining us.
Thank you, Abe. Thanks for having me.